Mercedes-Benz has revised its annual profit margin forecast downward following a disappointing second quarter marked by sluggish sales and earnings. The German automaker now expects an unadjusted return on sales between 10% and 11%.
Mercedes-Benz just dropped a bombshell, sending shockwaves through the entire automotive industry. The luxury king of the road is skidding off track, and the entire industry is feeling the tremors. Profits are plummeting, unsold cars are stacking up, and their big gamble on electric vehicles is unraveling faster than anyone expected. This isn't just a hiccup for Mercedes, it's a wake-up call for every car maker in the world. What exactly is the announcement? How did Mercedes, once the symbol of success, miss the mark so badly? And most importantly, how will this seismic shift impact what you drive and what you pay? Stay tuned because this goes way deeper than you expect. The shocking announcement. Mercedes-Benz, a name that once symbolized luxury, performance, and cutting-edge technology, is now at the center of a storm no one saw coming. In their latest financial report, Mercedes revealed that their profit margin, a solid 10% just a year ago, has nosedived to a shaky 4.7%. That's not just a dip, it's an alarm bell. At the heart of the issue is their ambitious push into electric vehicles. Models like the EQ series were supposed to be the future, blending sustainability with luxury. Instead, they've become a financial burden. Unsold EQ vehicles are piling up on dealership lots, with some sitting there for over 500 days. Imagine walking past the same shiny, untouched car for nearly 2 years. It's not just embarrassing, it's a sign that something's gone seriously wrong. This isn't just a problem for Mercedes. When a giant like this stumbles, the shockwaves ripple across the entire industry. Dealers, consumers, and competitors are all watching closely, wondering what this means for the future of luxury cars. What's gone wrong? So, what's behind Mercedes-Benz's dramatic fall? The answer lies in two critical miscalculations. First, they overestimated the demand for luxury EVs. Sure, the idea of a sleek, eco-friendly car sounds great on paper, but in reality, consumers aren't flocking to these high-priced models. The EQS, for instance, boasts impressive features, but comes with a sticker price north of $135,000. That's a tough sell, even for affluent buyers. Second, Mercedes neglected the vehicles that built their empire. Their core luxury models. The iconic S-Class, once a bestseller, has seen demand slow dramatically. As prices soared, loyal customers started looking elsewhere. Meanwhile, Tesla and other competitors swooped in with more affordable options, offering electric cars that feel just as cutting edge without breaking the bank. In global markets like China, where Mercedes once reigned supreme, the story is the same. High-priced EVs aren't resonating with consumers who are turning to more affordable alternatives. This isn't just a sales slump, it's a major strategic misstep. The ripple effect. Mercedes' struggles are creating ripples far beyond their showrooms. Other legacy automakers like Volkswagen and BMW are facing similar challenges, overproducing luxury EVs while demand lags behind expectations. It's becoming clear that the entire industry may have overplayed its hand on electric vehicles. The result? An automotive market that's increasingly unpredictable. For consumers, this means higher prices across the board. As companies like Mercedes scramble to offset losses, the cost of everything, from luxury sedans to entry-level SUVs, is climbing. And it's not just new cars that are affected. Used car prices are spiking too, as supply chain issues and economic uncertainty push more buyers into the secondhand market. Dealerships are feeling the pinch as well. Many are sitting on unsold inventory, forced to discount heavily just to make space. This isn't sustainable, and some dealers are already shutting their doors. The ripple effect is turning into a tidal wave, threatening to reshape the automotive landscape entirely. The luxury crisis. Mercedes-Benz's challenges highlight a larger issue. The luxury car market is in trouble. Brands like BMW and Audi are also grappling with unsold inventory and falling profits. Even Tesla, the poster child for EV success, isn't immune, facing increasing competition and growing consumer skepticism about the practicality of electric cars. What's most alarming is how quickly the perception of luxury is changing. For decades, Mercedes symbolized unattainable elegance, a car that turned heads and opened doors. Today, that allure is fading. With EVs struggling to resonate and core models losing steam, Mercedes is at risk of losing its identity altogether. This crisis isn't just about one company, it's about an entire industry at a crossroads. The days of relying on high-priced, high-margin luxury vehicles are numbered. Consumers are demanding more value, more practicality, and more innovation. Whether Mercedes and its competitors can adapt remains to be seen. pricing problems. Mercedes-Benz, a brand synonymous with luxury and sophistication, has always operated in a unique realm where price tags rarely deterred its affluent clientele. However, the tide has turned, and the very pricing strategy that once set Mercedes-Benz apart is now threatening its stability. The transition to electric-powered vehicles has thrown a wrench into the company's well-oiled machinery. While the electric vehicle revolution promised a greener future, it also brought significant financial challenges that even an automotive giant like Mercedes-Benz could not entirely predict. For decades, Mercedes-Benz positioned itself as the pinnacle of automotive luxury, crafting vehicles that justified six-figure price tags. However, the landscape has changed drastically. Consumers who once willingly paid for unmatched performance and cutting-edge technology are now re-evaluating their spending habits. This is particularly true in the realm of electric-powered vehicles, where pricing has become a key battleground. The flagship electric-powered models from Mercedes-Benz, such as the EQ series, carry astronomical price tags that alienate even the most loyal customers. For instance, the electric-powered version of the iconic S-Class often exceeds $135,000. This price may reflect luxury, but it fails to resonate with modern buyers who are increasingly driven by value and practicality. The electric-powered vehicle market has brought new competitors into the fray. Companies like Tesla and newer players such as Rivian and Lucid Motors are offering electric-powered vehicles that are often priced lower but deliver similar levels of innovation. For many potential buyers, a Tesla Model S or even the more affordable Tesla Model 3 provides a comparable experience without the staggering cost. One of the most glaring issues with Mercedes-Benz's pricing strategy is the overproduction of expensive electric-powered models that do not meet consumer demands. Vehicles such as the EQB and EQS were designed to dominate the luxury electric-powered vehicle market, but have instead become symbols of excess inventory. These models, laden with advanced technology and premium materials, have languished on dealership lots for over 500 days in some cases. This overproduction has led to a ripple effect, burdening dealerships with unsold stock and forcing them to resort to heavy discounting to move these vehicles. Such actions erode profit margins and tarnish the exclusivity of the Mercedes-Benz brand. The root of Mercedes-Benz's pricing woes lies in its inability to strike a balance between luxury and accessibility. While it is true that the brand has historically catered to a niche audience, the automotive market is now more diverse than ever. Buyers want vehicles that not only embody cutting-edge technology, but also align with their budgets and practical needs. Mercedes-Benz's electric-powered vehicles, despite their advanced features, are perceived as unattainable by the broader audience. This has created a disconnect between the company's offerings and consumer expectations, leaving its once loyal customer base to explore alternatives. The missteps. Mercedes-Benz's journey into electric-powered vehicles was marked by grand ambitions and significant investments. The company envisioned a future where its luxury electric-powered cars would dominate the market, blending sustainability with prestige. Billions of dollars were poured into research and development to ensure that Mercedes-Benz remained at the forefront of the electric-powered revolution. However, what began as a bold leap into the future has now become a cautionary tale of missteps and overestimation. At the core of this issue is a fundamental misunderstanding of consumer readiness for electric-powered vehicles. Mercedes-Benz operated under the assumption that its wealthy clientele would seamlessly transition from traditional combustion engines to electric-powered models. However, this transition proved far slower than anticipated. Buyers expressed concerns over range anxiety, the lack of sufficient charging infrastructure, and the practicality of owning an electric-powered car. For all its advancements, the market for luxury electric-powered vehicles remains niche, and Mercedes-Benz overestimated its size. The overproduction of electric-powered vehicles exacerbated the problem. Models like the EQS and EQB, which were meant to symbolize the future of Mercedes-Benz, became liabilities. Manufacturing facilities churned out these high-end electric-powered vehicles in large quantities, expecting demand to match supply. However, reality painted a different picture. Dealerships were inundated with inventory they could not move, leading to a glut of unsold vehicles. As these cars sat idle, their value depreciated, creating additional financial burdens for the company and its dealerships. Adding to this challenge is the pricing disparity between Mercedes-Benz and its competitors. Brands like Tesla have mastered the art of delivering cutting-edge electric-powered vehicles at relatively affordable prices. The Tesla Model 3 and Model Y, for instance, are priced significantly lower than Mercedes-Benz's electric-powered offerings, yet they deliver comparable performance and technology. This competitive edge has allowed Tesla to capture a substantial share of the electric-powered vehicle market, leaving legacy automakers like Mercedes-Benz struggling to keep pace. The global nature of the electric-powered vehicle market has also posed unique challenges for Mercedes-Benz. In China, a critical market for luxury automakers, electric-powered vehicles from Mercedes-Benz have failed to resonate with consumers. High price tags and fierce competition from domestic brands have made it difficult for Mercedes-Benz to establish a foothold. Meanwhile, in regions like North America and Europe, infrastructure gaps continue to deter potential buyers from embracing electric-powered cars fully. The absence of widespread charging stations and the perception that electric-powered vehicles are impractical have hampered adoption rates. Furthermore, the company's decision to prioritize luxury features over affordability has created a significant barrier to entry for potential customers. Mercedes-Benz's electric-powered vehicles are packed with advanced technology, from semi-autonomous driving systems to state-of-the-art infotainment platforms. While these features showcase the brand's commitment to innovation, they come at a cost, literally. The price of these vehicles far exceeds what many consumers are willing or able to pay, creating a limited audience for these high-end models. The impact on dealerships. The challenges faced by Mercedes-Benz in the electric-powered vehicle market have not only affected the company's bottom line, but have also had far-reaching consequences for its dealership network. Dealerships serve as the front line of the automotive industry, bridging the gap between manufacturers and consumers. However, the misalignment of Mercedes-Benz's production strategy with consumer demand has created significant strain on these vital partners. One of the most pressing issues is the inventory imbalance caused by overproduction. Dealerships across the globe are struggling to accommodate the surplus of electric-powered vehicles that have failed to sell. Large numbers of models like the EQB and EQS are occupying valuable showroom and lot space, leaving little room for other vehicles that might appeal to a broader audience. This imbalance has forced dealerships to implement aggressive discounting strategies to clear inventory, eroding profit margins in the process. The financial strain on dealerships has been exacerbated by the high costs associated with maintaining unsold electric-powered vehicles. These vehicles require regular upkeep to ensure they remain in pristine condition for potential buyers. Additionally, as the vehicles sit idle, their value depreciates, further diminishing the potential revenue dealerships can generate from sales. For smaller dealerships, these challenges can be particularly devastating, threatening their financial viability. Consumer perception has also played a role in the struggles faced by dealerships. The allure of owning a Mercedes-Benz, once a symbol of exclusivity and prestige, has been diminished by the oversaturation of electric-powered vehicles in the market. Customers are less inclined to view Mercedes-Benz as a luxury investment when the same models are frequently discounted to move inventory. This shift in perception has made it increasingly difficult for dealerships to justify the premium price tags attached to Mercedes-Benz vehicles. Moreover, the disconnect between Mercedes-Benz's production priorities and consumer preferences has left dealerships unable to meet the needs of their customers. While electric-powered vehicles dominate inventory, demand for traditional luxury sedans and sport utility vehicles remains strong. This mismatch has created frustration among customers who visit showrooms only to find that the vehicles they desire are unavailable. Dealerships are left scrambling to secure inventory that aligns with market demand, further straining their operations. The relationship between Mercedes-Benz and its dealerships has also been tested by these challenges. Dealerships are increasingly vocal about the need for greater support from the manufacturer, whether in the form of incentives, revised production quotas, or better marketing strategies. The strain on this partnership has highlighted the broader impact of Mercedes-Benz's missteps, demonstrating how the fallout from poor strategic decisions reverberates throughout the entire supply chain. Mercedes-Benz's struggles raise car prices. The struggles of Mercedes-Benz are not confined to luxury car buyers or dealerships. They have implications for the broader automotive market that affect everyday consumers. One of the most immediate consequences is the rising cost of vehicles across all segments. As Mercedes-Benz and other luxury automakers grapple with financial losses, they are passing these costs onto consumers. This means higher prices for new cars, even for those that are not electric-powered. The trickle-down effect of luxury automakers' pricing challenges is also evident in the used car market. With fewer affordable options available for new car buyers, demand for used vehicles has surged. This increased demand has driven up prices, making it harder for everyday consumers to find budget-friendly options. For those looking to trade in or sell their vehicles, the market volatility created by Mercedes-Benz's struggles has made it difficult to secure fair offers from dealerships. Furthermore, the focus on electric-powered vehicles has diverted attention and resources away from other areas of the automotive market. For consumers who are not yet ready to embrace electric-powered technology, the lack of investment in traditional combustion engine vehicles and hybrids is limiting their choices. The industry-wide push toward electrification, driven in part by companies like Mercedes-Benz, has created an imbalance that leaves many buyers feeling underserved. The uncertainty surrounding the automotive market has also led to longer waiting times for vehicles, as dealerships and manufacturers attempt to recalibrate their strategies. For consumers, this means delays in receiving their vehicles and fewer options to choose from when making a purchase. This shift is not only frustrating but also indicative of the broader challenges facing the industry as a whole. The electric vehicle bubble. The automotive industry's collective push toward electric-powered vehicles has been nothing short of monumental. Promises of a greener, cleaner future spurred automakers around the world to pour billions of dollars into the development of electric-powered technology. For Mercedes-Benz, this was more than just a commitment to sustainability. It was a declaration of intent to dominate the next era of luxury transportation. However, the once bright dream of an electric vehicle revolution is now revealing cracks, and the reality is far more complicated than the optimistic forecasts had suggested. Mercedes-Benz's troubles are emblematic of a larger issue. The electric-powered vehicle market may have been overhyped. Automakers, eager to establish themselves as leaders in this new frontier, jumped headfirst into production without fully assessing the readiness of consumers and infrastructure. In their haste, many, including Mercedes-Benz, overestimated how quickly buyers would embrace electric-powered vehicles, especially in the high-end luxury segment. One of the most glaring challenges facing the electric-powered vehicle market is the lack of sufficient charging infrastructure. While governments and private companies are working to expand charging networks, progress has been slow. For many potential buyers, the limited availability of charging stations remains a significant deterrent. This is particularly true in regions like rural North America and parts of Europe, where long stretches of road with no charging options make owning an electric-powered car impractical. Even in urban centers, the uneven distribution of charging points creates challenges for apartment dwellers and city residents without access to private garages. Range anxiety further compounds the problem. While Mercedes-Benz's electric-powered models boast impressive ranges, they are still subject to the inherent limitations of current battery technology. For many buyers, the fear of running out of power on a long trip outweighs the appeal of an electric-powered vehicle's eco-friendly features. This anxiety is especially pronounced among luxury buyers, who often expect seamless convenience and reliability from their vehicles. The cost of electric-powered vehicles is another major hurdle. While traditional luxury buyers might be willing to pay a premium for performance and prestige, the electric-powered vehicle market operates under different rules. Consumers now place a greater emphasis on value, and the steep price tags attached to electric-powered vehicles like the EQS and EQB make them inaccessible to all but the wealthiest buyers. Even then, these buyers are increasingly questioning whether the added cost of an electric-powered vehicle is worth it compared to traditional luxury cars or more affordable electric-powered options from competitors. Innovation meets affordability. In contrast to the struggles of Mercedes-Benz, Tesla has emerged as the poster child for electric-powered vehicle success. The American automaker revolutionized the industry by making electric-powered vehicles not just desirable but accessible. Tesla's ability to blend cutting-edge technology with competitive pricing has given it a significant advantage over legacy automakers like Mercedes-Benz, who are still navigating the challenges of transitioning to electric-powered mobility. Tesla's most notable achievement has been its ability to scale production while maintaining affordability. The Tesla Model 3 and Model Y, priced significantly lower than Mercedes-Benz's electric-powered offerings, have become staples in the electric-powered vehicle market. These models appeal not only to early adopters but also to a broader audience looking for reliable and relatively affordable electric-powered cars. By comparison, Mercedes-Benz's focus on high-end luxury has limited its potential customer base, leaving it vulnerable to the shifting dynamics dynamics of the market. Another key factor in Tesla's success is its approach to charging infrastructure. Recognizing early on that range anxiety was a significant barrier to adoption, Tesla invested heavily in building its own network of charging stations. Today, Tesla owners enjoy access to one of the most comprehensive and reliable charging networks in the world. Mercedes-Benz, on the other hand, has relied on third-party providers, which often lack the reach and reliability of Tesla's proprietary network. This disparity highlights the importance of infrastructure in driving consumer confidence and underscores why Tesla has been able to maintain its lead in the electric-powered vehicle race. Tesla's ability to innovate quickly has also set it apart. While legacy automakers like Mercedes-Benz must navigate the complexities of large-scale operations and entrenched corporate structures, Tesla operates with the agility of a tech company. This allows it to adapt to market trends and consumer preferences more swiftly than its competitors. For instance, Tesla's software updates and integration of autonomous driving features have kept it at the forefront of innovation, further cementing its appeal to tech-savvy buyers. Global competitors. Mercedes-Benz is not alone in its struggles. Other legacy automakers, including Volkswagen and BMW, are facing similar challenges as they attempt to navigate the rapidly evolving automotive landscape. Volkswagen, for example, has invested heavily in its ID series of electric-powered vehicles, only to encounter production delays and lukewarm sales. BMW, another luxury powerhouse, has seen its efforts to compete with Tesla fall short due to high prices and inconsistent consumer demand. What sets Mercedes-Benz apart, however, is the scale of its commitment to the electric-powered vehicle market and the resulting impact on its core business. The company's decision to prioritize electric-powered vehicles over its traditional combustion engine models has left it in a precarious position, while competitors like BMW and Audi have maintained a more balanced approach, continuing to invest in both electric-powered and traditional vehicles. Mercedes-Benz's over-reliance on electric-powered vehicles has exposed it to greater risks. The global nature of these challenges adds another layer of complexity. In China, a critical market for luxury automakers, local brands are emerging as formidable competitors. Companies like BYD and NIO are offering electric-powered vehicles that are not only more affordable but also better tailored to the needs of Chinese consumers. Mercedes-Benz, with its European-centric design and pricing, has struggled to resonate with this audience, losing market share to domestic rivals. In North America, the story is no different. While Tesla continues to dominate the electric-powered vehicle market, new players like Rivian and Lucid Motors are gaining traction. Rivian, with its focus on electric-powered trucks and sport utility vehicles, has carved out a niche in the growing market for electric-powered utility vehicles. Lucid Motors, on the other hand, has positioned itself as a direct competitor to Mercedes-Benz with its high-performance luxury electric-powered sedans. These new entrants are not only challenging Mercedes-Benz, but also reshaping consumer expectations for what an electric-powered vehicle can be. Impact on the automotive industry. The struggles of Mercedes-Benz and other legacy automakers are not confined to the luxury segment. They are indicative of broader challenges facing the entire automotive industry. As companies invest heavily in electric-powered technology, the costs of production have risen dramatically. These costs are being passed on to consumers, resulting in higher prices for both electric-powered and traditional vehicles. For everyday consumers, this means fewer affordable options in the market. The average price of a new car in the United States has now surpassed $45,000, making it increasingly difficult for middle-class buyers to afford a new vehicle. Even in the used car market, prices have surged due to limited supply and high demand. This has created a challenging environment for buyers, many of whom are delaying purchases or turning to alternative modes of transportation. The economic impact extends beyond consumers. Dealerships, which serve as the bridge between manufacturers and buyers, are facing significant strain. Inventory imbalances caused by overproduction of electric-powered vehicles have forced dealerships to offer steep discounts, eroding profit margins. In some cases, dealerships are unable to sustain these losses and are being forced to close their doors. This disruption in the dealership network further complicates the ability of automakers like Mercedes-Benz to connect with consumers. The shift toward electric-powered vehicles has also placed immense pressure on supply chains. The production of electric-powered vehicles requires a steady supply of rare materials such as lithium and cobalt for batteries. The increasing demand for these materials has driven up prices, further inflating production costs. Additionally, supply chain disruptions caused by global events, including the ongoing pandemic, have exacerbated these challenges, leading to delays and increased costs. Future outlook. Mercedes-Benz finds itself at a crossroads. The company's current trajectory is unsustainable, and significant changes are needed to regain its footing in the automotive industry. The first step is a reassessment of its electric-powered vehicle strategy. While the push for sustainability is commendable, Mercedes-Benz must recognize that the market for luxury electric-powered vehicles is not as large as initially anticipated. Adjusting production to align with actual demand will help reduce inventory imbalances and stabilize pricing. In addition to recalibrating its production strategy, Mercedes-Benz must address the affordability gap. Introducing electric-powered models that are more accessible to middle-class buyers can help the company broaden its customer base. This does not mean sacrificing luxury, but rather finding innovative ways to deliver premium features at a lower cost. Rivals like Tesla have demonstrated that this balance is possible, and Mercedes-Benz must follow suit if it hopes to remain competitive. The company must also strengthen its relationships with dealerships. Providing better incentives, support, and marketing resources can help dealerships move inventory and rebuild consumer confidence in the Mercedes-Benz brand. This collaborative approach is essential for navigating the challenges of the electric-powered transition and maintaining a strong presence in the market. Finally, Mercedes-Benz must continue to innovate. The automotive industry is undergoing a transformation, and the companies that succeed will be those that embrace change while staying true to their core values. For Mercedes-Benz, this means leveraging its legacy of luxury and performance while adapting to the demands of a rapidly changing world.